Problem 19.5b, NOL without valuation account. Austin Inc. reported the following pre-tax income loss and related tax rates during the years 2019 through 2023. Pre-tax financial income or loss and taxable income or loss were the same for all years since Austin began business. The tax rates from 2019 through 2023 were enacted in 2019. So the problem gave us pre-tax income and the tax rates for the years 2019 through 2023. The instructions state in Part A to prepare the journal entries for the years 2020 through 2022 to record income taxes payable, refundable, income tax expense, benefit, and the tax effects of the carry forward. Assume that Austin expects to realize the benefits of any loss carry forward in the year that immediately follows the loss year. So when we look at the schedule that was given to us, we see that Austin had a $140,000 pre-tax loss in 2020. This would result in a carry forward that could be utilized in the next years when they have pre-tax financial income. So we're going to record the entry starting in 2020 when Austin had the net operating loss. To record this entry, we are going to debit deferred tax asset for $28,000 and credit benefit due to loss carry forward for the same amount. We got this amount by multiplying the $140,000 NOL times the 20% tax rate. In 2021, Austin had $30,000 of pre-tax income, and so they would utilize $30,000 of the NOL from 2020 and have $110,000 left. Their income tax expense would be $6,000, which is $30,000 times the 20% tax rate. So to record this entry, we would debit income tax expense for $6,000 and we would credit the deferred tax asset for $6,000. In 2022, Austin had $60,000 of pre-tax income, and they could utilize that amount from the NOL carry forward and still have $50,000 left to utilize in future years. The income tax expense for 2022 would be $12,000, which is $60,000 times the 20% tax rate. To record the entry for income tax expense in 2022, we would debit income tax expense for $12,000 and we would credit deferred tax asset for $12,000. In Part B of the problem, it states, indicate the effect the 2020 entry or entries has on the December 31st, 2020 balance sheet. So on the balance sheet for 2020, the deferred tax asset of $28,000 would be recorded as a non-current asset, and the $28,000 benefit due to loss carry forward would have the effect of increasing retained earnings for that year. Part C of the problem states, prepare the portion of the income statement starting with operating loss before income taxes for 2020. So the operating loss before income taxes was $140,000. The benefit due to the loss carry forward was $28,000. So the net loss for 2020 would have been $112,000. Part D of the problem states, prepare the portion of the income statement starting with the income before income taxes for 2022. In 2022, Austin had $60,000 of income before income taxes. Their current income tax expense would have been zero because they would have utilized their NOL carry forward. The deferred portion of income tax expense would have been the $12,000 of the deferred tax asset that they utilized. So net income for 2022 would have been $48,000. And that is the conclusion of the demonstration for problem 19.5b.